have to bring it closer to compliance, or in terms of tax compliance, you'll never know the reality of what it means to be compliant until it gets to your door, or when you get to the wrong side of non-compliance. But anyway, I think this session is just to serve as a good brief to help us know really what are the realities and the illusions or the mirages of tax compliance. Okay, so we'll just quickly get into the tax framework in Kenya. Now, why is it important to understand compliance in Kenya? Why is it important for us to know and really get the need of being compliant? One, it's a legal obligation. We have a tax framework, we have tax laws and regulations that are put forth to govern the taxation system in Kenya. Now, part of it requires us to, it obligates us to remit taxes to the government, so that these can also be used for the purposes of the government earning its revenue, right? Yeah, because apparently it seems like one of the greatest source of our income or revenue as a country is taxes. Okay. And of course, we have other sectors such as agriculture that contributes. So it's our legal obligation to be compliant and to adhere with the rules and regulations that have been set forth. Someone who is in business will look into their reputation, right? You'll want to be more, you'll want to have a good name out there, so that when you're going to drop in your tender or do whatever it is, part of the requirements is give us your tax compliance certificate. So it's also good for business reputation generally to have a good name out there. Okay. Yeah, understanding tax compliance is also important for your financial management and tax planning purposes. And then finally, to avoid penalties. This one, we avoid it as play. It's not something you would like to get into. It's like someone is taking money away from you illegally. Okay. Now, how does our tax framework look like? The regulator of the taxation system in Kenya is the National Treasury. So the Kenya Revenue Authority and the taxation system is under the National Treasury and Economic Planning Ministry. Okay. And this becomes the regulator of the tax framework and the system in Kenya. Ideally, what they do is ensure that there are policies that have been set forth to govern the taxation system in Kenya, and also to see where there are deficits and also gaps, and to ensure that those gaps have been filled up, and that we have a smooth and a seamless running framework within our country. And KRA, definitely, the Kenya Revenue Authority is the administration body. This is the arm that's responsible for the collection of revenue. KRA has provided for us, I know of, two systems, iTax and ICMS. ICMS is the Integrated Customs Management System. And these are the, they're like the framework or the system that the Kenya Revenue Authority utilizes or allows the members of the public, every individual, to be able to file their return, okay, and also submit or remit their taxes. So, and of course, all payments are now made through the government pay bill. The government has a pay bill 22222. So whichever payment you're going to make, you have to do it through the government pay bill. Great. I have a short trivia here, and I'd like us to participate in this one. So you can drop in the chat box your answer if you know the answer to this trivia that I'm going to project in just a few. One, what English word has 3 consecutive double letters? Who knows this one? What English word has 3 consecutive double letters? Feel free to chat in your answer. 3 consecutive double letters. Is there anyone who knows this one? Any trial?
Bookkeeper.
Bookkeeper, right. Yeah, that's right. Bookkeeper, bookkeeping. That was Frida. Thank you, Frida. How about this one? How about the next one? Sorry. Yeah, what is seen in the middle of March and April that can be seen at the beginning or end of either month? Wants to try this one? Letter R, yeah, Vincent. That's right. Letter R. Yeah, letter R. That's right. So R can be seen in the middle of March and April, and it cannot be seen on either end. Okay. Good trial. I don't know if I should give you a last one. Let me check if there's another one. No, I think that was the last one for now. Okay. But that's nice. So let's get into it. We have 2 types of taxes in Kenya. Okay, we have direct taxes and indirect taxes. Definitely, I think this is something we are aware of. Direct taxes include the income tax, and income tax comes in various ways. There's a corporation tax and the residential rental income, the RRI. And then we have PAYE. This is also an income tax on individuals. Okay. And then there are indirect taxes such as withholding VAT, excise duty, and the likes, customs payment, and the likes. So these ones are taxes that are paid indirectly. Okay, great. So I'll get into the tax updates that have been up and about within our country in Kenya. And what are the implications of this? What does it mean to us as citizens or as business? And what do we ought to do about it, okay? The first one is on eTIMS compliance. I think this one has been a big one over the recent few days or months or so. And KRA is up and about to ensure that everyone is onboarded onto eTIMS. Now, what is eTIMS? A VAT registered person, okay, who issues an invoice with VAT is required to register or to onboard into a system that is called Electronic Tax Invoice Management System. That is the eTIMS, okay? For what purposes? So that KRA can be visible, can have visibility of what is being taxed out and what is also where the revenue is, okay? So as VAT is part of the taxes we have in Kenya, KRA is trying to put up a simple, or rather an easier, seamless system through which you can do your invoicing, and the supply is recorded by the KRA, or it's transmitted to the KRA, and they have a visibility. Now, the reason why they wanted to do this is so that when you're filing your VAT return, it can be automated. It can be an automated process, okay? So that you don't have to manually input your transactions in a return and do all that processes. Now they're trying to roll out, or they're coming this month, February, all transactions are going to be that are recorded on eTIMS and transmitted to KRA will be auto-populated in a return. So what you'll just do is pull out the auto-populated return, check if all your transactions have been recorded or captured, and then you file your return. You don't have to manually again input all your transactions. Okay, so this is a big one. This one is a big one. Why? Because from 1st of January going forward, it is clear that any expenditure that is not eTIMS compliant is going to be non-allowable deduction for tax for corporate tax purposes. Okay, that means that when you're going to file your return, okay, in June or at whatever time, you declare your income, and the moment you declare your income, if for you to claim expenses against that income, then you have to prove that this expense is an eTIMS compliant expense. So only those compliant expenses are the ones that are going to be allowable deductions against your income. Okay, so this one is a loss for the non-compliant entities because of definitely they're losing out on businesses. People wouldn't want to go on the wrong side. People will want to, businesses and people want to, be in a position to claim expenses. Otherwise, if you don't claim expenses against your income, you're going to pay more taxes. Okay. And definitely, of course, there are gaps that have been identified. What about transactions of that are recorded in petty cash? You board a pikipiki or a motorbike, and takes you somewhere, brings you back. You give them a cash payment. Do they really need to issue you an eTIMS compliant invoice at that instance? Right. So those are gaps identified. And also for how about non-registered service providers? Yeah, when I capture this one, I also noticed that, of course, there was a regulation that was issued sometimes back, around in December, towards the end of December 2023, that gives an exemption of those people who are not required to do what? To issue an eTIMS compliant invoices. Example is those guys whose businesses have a turnover that is lower or below 5 million. Okay, and of course, you realize that there is how will you prove that this guy or this person you're doing a business with is earning or having a turnover that is below 5 million in a year? Okay, so those are some of the gaps. Or how will you be able to authenticate that? How will you prove or verify that the supplier's annual turnover is indeed below the 5 million threshold? So I think these are some of the challenges that are coming up. Unless KRA will be issuing an exemption certificate, you never know who is below the 5 million turnover threshold. Okay, yeah. So non-VAT registered taxpayers, those who have not onboarded also on eTIMS, there is a deadline for 31st March 2024. Okay, so you have to ensure that you do your registration and get onboarded on eTIMS. So this is a big one currently. I really hope that it will be beneficial to us to know about this. The other one is on monthly rental income. This is also a recent tax update that has come up. It is taking effect, of course, on 1st January 2024. And the rates have been reduced, toned down from 10% to 7.5%. Of course, these are relief to the resident landlords. But again, I need to pause there and say or mention that for those landlords who are doing commercial rental, or they have commercial rental facilities, then these reduced rates do not apply to them. These reduced rates is only for residential rental income, okay, where people live, okay, the residential places or houses. But for commercial rent, like the offices that businesses have rented out, those ones do not qualify for this reduced rate of 7.5%. Okay. And the other update is on advanced tax, of course, on vehicles. So we have vehicles such as vans, pickups, trucks, prime movers, trailers, lorries. These have been, the advanced tax has been increased from 1,500 per ton to 2,500, okay? And there's also an option of 5,000 per year, whichever of these two will be high, right? So that means that the guys who own vans, pickups, annually you'll be required to remit even more and more because the rates have been increased, okay? How about those guys with saloon cars, minibuses, buses, station wagon, coaches, these vehicles that have a passenger capacity, okay? So you'll be required to, the rates have been increased again higher from 100 Kenya shillings per passenger capacity to from 60 to 100, okay? Or 5,000, whichever is higher. Now, a non-resident who carries on business in Kenya through a permanent establishment, okay? For example, a branch that is a permanent establishment is required to pay tax on any repatriated income for any year of income, okay? So there's that portion of your income that is repatriated back to your head office, okay? There will be tax on this one. And of course, it also comes with the relief. The tax that was being charged on the profits for permanent establishment was at 37%, but this one has been reduced to 30%, so that the playing field can be leveled for all companies in Kenya. But now of course, you have to pay repatriated income tax at the rate of 15%. Okay, great. I think I'm almost coming to the end of this one. The other one is, of course, on NSSF and the NHIF, which is going to be translated to SHIF. Okay. What about the NSSF? You realize that last year in February, okay, 2023, there was a judgment that was delivered by the Court of Appeal that upheld the legality of the NSSF Act 2013. So there have been legal battles here and there in the courts, and they have protracted for a long time until last year, when they now decided to uphold the legality of this act. Initially, it was considered illegal, as the housing levy right now is considered unconstitutional, okay? So what happens? The rates were upgraded. So for last year, from 3rd February to this year, January 2024, the rates were at 1,080, 1080 for both each the employee and the employee. Okay. Now, effective this February 2024, the payroll for this period, going forward, the rates are going to be upgraded again. Okay. So that's how the Act stipulated it. The rates will be upgraded annually. Okay. So the rates are going to be adjusted upwards again from February, payroll period, February 2024, going forward to the next year, let's say Feb 2025. So an employee is going to be required to remit 2,160. The employer also matches the same and remits 2,160. Of course, the contribution should be made, or the remittances should be done by the 9th day of each subsequent month. I hope this one is clear. And then finally, we have the one on transfer pricing requirements. I think this one is for entities that are part of a multinational enterprise group. So there is a transfer pricing requirement. Of course, this one requires you to file notification with the KRA, file your country by country reporting, file your master file, file your local file. Okay. If you don't, if you don't fall under this, then don't worry about it. You really have no cause to worry. But for those businesses and entities and guys who, of course, do consultancy for multinational entities, I think this is a big one, and there is this requirement. Of course, there are penalties and also legal obligations to this one. So I believe that it will be helpful. Now, when you're filing notification with the KRA, you need to inform the KRA about three things. One, where or who, if you are the ultimate parent entity, okay? If your entity is the ultimate parent entity of the whole group. If not, then you're supposed to notify the commissioner who or which entity is the ultimate parent entity or the surrogate entity, okay? Surrogate entity is like a surrogate mother, someone who takes the responsibility of someone else, okay? So when it comes to filing this master file and also the country by country reporting, there's the ultimate parent entity that is obligated to do this. So you're supposed to inform the commissioner who is going to do this or which entity is going to file this country by country reporting, okay? Of course, there are so many things to be declared in this one. Your transactions, whichever businesses you do, from which entity or jurisdiction do you get most of your income? What are the risks that are borne by each entity, and the like. So this just gives the revenue authority or the commissioner a visibility of what you're doing, the businesses you're doing, how much are you really paying the taxes that you are supposed to pay, or are there taxes that are not being paid? Okay. Well, friends, let's take a break on this one. You realize that there's really so much that is going on within our taxation system, and you know, every other day there's something that is introduced to squeeze more tax from the citizens of Kenya. Of course, you realize that there are so many gaps. Not everyone is paying taxes in Kenya. In fact, you may be shocked. Those who are supposed to pay are the ones who are not paying. But definitely, the Revenue Authority is trying as much as possible. There's this thing that is called window tax that was in England during the period 1690s. It was introduced in England, whereby if you had a house, okay, and you have windows in that house, you are required, or you are expected to pay taxes on the number of windows that you have. So there is a threshold. Beyond this number of windows, you're supposed to pay taxes on the extra windows, or depending on how large size, in terms of size, the window is. So you see, guys, when this one was becoming now tough on them, people decided to seal up those windows, okay, so that you don't pay taxes. But you know, there's also the negative side of it, where you know, windows are important for fresh air, you know, just for ventilation, and also for allowing light to come in. You know, these are important things. So you get to a point where someone's house becomes so dark, and you know, they don't have that free ventilation of air. So it became a problem. Eventually, it died out, and it was opposed by so many people, and it died. Okay, but you know, the point here is that at times taxes can squeeze people to a point of, you know, someone who really wanted to do you good, or people are even taxed on doing something good. Let's say you put up your business in Kenya. The fear is my employees are going to be overtaxed. Why should I set up my business in Kenya? Okay, so there need to be a balance. I don't know how to put this one, but the revenue authority or the government needs to have a balance on on the taxation system that you're having in Kenya, not to overburden the citizens so much with taxes, but also to ensure that they get enough revenue to run the government and to run the affairs of the government within the country, to provide those public services to the citizens of Kenya, okay? But again, you also need to ensure that we do not squeeze too much until, people think of taxes and they dread, they fear what might become out of it. Now, compliance reviews and measure. Why is it? Why should we ensure that we are, or what can we do to ensure that we are compliant? Okay. So there is something called a tax amnesty. This one is currently ongoing. It began on 1st of September 2023, and it shall lapse on 30th June 2024. Okay. And the Finance Act introduced this amnesty. It's like a forgiveness period or window. You go and you ask for forgiveness and you say, I have done ABCD and I think this is my mistake, this is my liability. So take my liability and forgive me the penalties and interest, okay? So the commissioner will refrain from recovering any penalties or interest on any tax debt, as long as you have paid the principal tax due, okay? For any period that is prior to 31st of December 2022. So if, for example, you had not been filing your returns all along until the period 31st December 2022, I mean, you can take advantage of this amnesty. Go and file your return, whichever penalties that arise out of it, the commissioner will waive those penalties. But if you declare income and you have some principal tax to pay, you need to pay your principal tax and the penalties will be waived. I think this one has been rolled out and it's ongoing. So take advantage of it, okay? This one is to encourage, of course, compliance. And the amnesty will lapse soon, 30th June 2024. So time is really of essence for this one. Time is of essence. So if you're planning to do something, be quick on it, okay? Another important aspect of ensuring that you're compliant, have a tax calendar, okay? This one really helps you, especially if you have certain obligations. You need to file your returns by the end of the 6th month or by June of this year. You need to file your return for 2023. Just have a tax calendar for my PAYE, NSSF, NHIF. When is the deadline? And then have a reminder. NITA, installment taxes for any businesses, your balance of tax, VAT, and withholding tax. What are the due dates? When am I supposed to file the return? When am I supposed to do what? To pay the taxes due or the liability on those items of tax, okay? Great. So I think we've covered really quite much extensive, and I'd like to now welcome questions and answers. I don't know if we have any questions or answer or of course comments as well, and if you also feel like you can answer some of these questions, well and good, okay? Right. So just prepare your questions. You can either unmute and air out your questions on this one. But of importance, friends, we need to fall within our compliance framework when it comes to tax purposes. I think if we continue with the non-compliance, sooner or later, it's going to catch up with us, okay? But I believe that the one way in which you can go through these tax compliance dilemmas is through ensuring that you file your return in good time, have your tax calendar, take advantage of the amnesty, okay? And have strategies for this. And I think all things will run well for you, okay? Yeah. Over and above that, we can all make it. We can all we can all navigate the compliance dilemmas that we are facing, whether you're a business, an individual, or whichever case, wherever you find yourself. Okay, great. So I'd like us to. Is there any? Do we have any questions? Do we have any comments on the same? Think we can have enough time for questions and comments as well.
I have a question.
Yes, Joel. Joel.
What if you have a registered company, for in this case a limited company, and like the case I have is a limited company that did a job in 2018, and then from there, and we filed the returns. From 2018, we haven't gotten a job. And now the person who does the filing forgot, and then I found we are being charged because of failing to do returns of 80,000 shillings. That's a fine. And the company have not done any job to warrant that they can even afford to pay that amount of money. Are we qualified to get this amnesty, or what should happen now?
Definitely. Joel, thank you for your question. That's a good one. So definitely you qualify for the amnesty, okay? For as long as it's for the period between or up to 31st of December 2022. So for any penalties, any liabilities, penalties and interest, okay? For up to the period 31st of December 2022, you qualify for this tax amnesty. So what you're required to do is, if you had no business completely, okay, during that period between 2018 up to 31st December 2022, you had no businesses, therefore you have no income to declare or the same, then you just file nil returns for your for your company, okay, for your limited company. File the nil returns, and then the penalties, apply for a waiver, okay? Apply for waiver of those penalties. So to answer your question briefly, yes, you qualify for the tax amnesty, and KRA should be in a position to process for you those the waiver of those penalties. Is that okay? I hope I answered your question, or I got the glimpse of the question you asked.
That's okay, but allow me just to do a follow-up on that about since now when you register for VAT, it obligates you to do the returns every month. If you find you don't have a business, is it okay that you can opt to go out? Meaning they remove you from paying the VAT or being in the registered VAT company until the time you get a job, because sometimes you forget or something happens and those dates, and then you are not in business. You know, when you're not in business, you may forget to do the return. So is it possible to opt out to be out of the VAT? Because previously it used just to do the annual one, but now when you register for VAT, you need to do that every month. Is there a provision that you can opt not to be on the VAT until such a time you get a job? I don't know whether it's possible.
Yes, Joel, thank you again for the follow-up question. Definitely, you see, the purpose of registering VAT for VAT purposes, and the Act stipulates it clearly, that you can register for VAT once you make supplies, taxable supplies of 5 million and above, okay? So once you foresee that you're going to make taxable supplies that are of around 5 million turnover and above that, then you are required by the law to register for VAT purposes, okay? Now, what happens if you go below that threshold, okay? Then definitely you're not required to, of course, remit VAT and
Hi, Tim. I think Zeddy has gone out of the meeting, but maybe he'll join us soon. And I can see a number of questions have been brought forward. they're going to be tackled once he gets back into the call. You can see Monica Wagas has a question there. We have got one from Alvin. Then I can someone, so their hand up. Steve M. Yes. Once he gets back, I think he's just facing some technical issues. He'll tackle them just in a few. Yeah, he's back. He's back, and he'll be able to tackle the questions.
Oh, sorry. Thank you so much. Sorry, I think I dropped out some technical hitches. Yeah, I was on Joel's question, and yes. So Joel, if you stop making taxable supplies, okay, or vatable supplies that are subject to VAT, then you're not obligated to do what? To remit VAT in that instance. However, you're required to file nil returns, okay, for VAT. Okay. Now, if you have not been filing the nil returns, then that means that you, when you want to close down your VAT obligation, then you need to file those nil returns for the periods you have not been filing the returns. Okay. But now, there is, of course, you can go and tell the KRA account manager or the relationship manager, or go to KRA and tell them, I'm not making any supplies right now currently that are vatable. Okay. So there are two options. Either you can have your obligation in dormancy status, or you can completely do what? Close it down. But you never know the future of your business. Okay. You never know the future prospects of your business, because for you to completely close your PIN or deregister your PIN, you need to have closed down your business completely if it's your limited liability business, and then of course take those documents from the BRS to KRA and tell them, I have closed down my business, please close down my PIN as well. But the easier option to go for is dormancy. Okay, I have done this one for several clients, and we have applied for them a dormancy status, and now they are not required to continue filing VAT over and over again and pay PAYE. Okay, so you can escape that. You can go file for dormancy, have your PIN or your obligation in a dormancy state until a period when you think you will start making taxable supplies. That's I hope I've answered your question, Joel. I don't know if
well answered. Thank you.
Great. Thank you. Is there any other question? I think I dropped out at some point. Probably I didn't see some of the questions that were there.
Yeah, sure. We have some questions, but even as we go into them, I saw Steve raised their hand. If you can, Steve, you can unmute, then bring out your question. In the meantime, as we wait for him, Alvin is asking what's the cutoff date for eTIMS compliant invoices? What's the cutoff dates for eTIMS compliant invoices?
Great. That's a good question, and thank you for your question. Now, the cutoff date for registering and onboarding to eTIMS, okay, is 31st of March 2024. So it's just about 1.5 months from now. Okay, so you're required to onboard to eTIMS and continue issuing eTIMS compliant invoice. So I think until then, you still have some time, okay? And you see, you need to issue eTIMS compliant invoices. So the earlier the better, okay? The earlier the better. I hope that was really the clarity that was required. But for corporate tax purposes, okay? For corporate tax purposes, the Finance Act 2023 introduced a provision that any business that needs to claim an expense against their income should be able to support that expense through an eTIMS compliant invoice. Okay, so from this became effective 1st of January 2024. Going forward, you're required to have or issue, if you're a supplier, an eTIMS compliant invoice. If you are if you're a client, or if you are the receiver of this invoice, if you're the buyer, you're supposed to tell your supplier to give you an invoice that is eTIMS compliant, so that you can be able to claim that expense for your business against your taxable income.
Thank you, Zedi. There's another question here. It's just a quick one. Robin Mugo, before we go to another one in the chat box. Robin is asking, I'm looking forward to get into the field of VAT returns filing. What's the big mistake that I should avoid?
Great, thank you, Robin Mugo, for your question. Welcome to the VAT registration platform. But I think of most importance is, one, please ensure that you're making a taxable supply that is over and above 5 million. Now, I'm just speaking from a VAT perspective, okay? Because that's the threshold. If you register for VAT before hitting this threshold, of course, you'll be required to account for VAT in that instance, okay? You'll be able to issue VAT invoices with VAT, and then as well remit these VAT to the KRA, okay? But I think one of the things you need to be careful about is ensure that you're making taxable supplies that are 5 million and above. And then over and above that, also ensure that you have the documents that are necessary for you to register for VAT purposes, okay? Definitely, the KRA has right now upgraded the requirements that are needed for VAT registration. So I think you can catch up and also see what are the requirements that are needed. There is a whole list of requirements, including the director's tax compliance certificates. If you have your own as well, you need to draft an application letter to them. Of course, these are for businesses and for limited liability companies, for businesses that are planning to get onboarded to VAT, okay? And then after getting onboarded to VAT, definitely you have to also get onboarded to eTIMS, or use the former ETR machines, okay? Definitely, they are the ETR machines that are approved by KRA and that you can use to issue an invoice that is compliant, okay? Or the other option is get onboarded to eTIMS. Of course, there are very many other systems for eTIMS that will work well for you, depending on what kind of businesses are you doing and why do you need the eTIMS, what for. Okay.
Thank you so much. There's another question I've forwarded to you from Monica Waga. She's saying, perhaps this is not related, but suppose an organization wants to start paying its employees in USD rather than cash, Kenya shillings. Which exchange rate will it use on a monthly basis? Also, when making a file or when making or filing statutory deductions, which exchange rate will be best to use?
Great. Thank you so much, Monica, for this one. Of course, it is not against any tax laws or regulations for you to, pay your local staff salaries in a foreign currency. Let's say in US dollars, or you want to pay them in pounds, you want to pay them in Japanese yen. It's well and good. Okay. And you need to then be very careful when it comes to the remission of PAYE and other statutory deductions, because these ones, after you have computed them, PAYE and those other statutory deductions are required to be remitted in Kenya shillings, because KRA only accepts payments in Kenyan shillings. Okay, so what rate do you use to convert, let's say, your dollar to the Kenya shilling equivalent? The CBK, the Central Bank of Kenya, usually gives rates almost daily. I think recently it has become problematic to give the rates daily, but the CBK will always give rates. So if you go to the CBK website, you will see the daily rate or the rate for that day. Okay, so I'd advise you to use the Central Bank of Kenya rates, mean rate for exchange or for conversion, or KRA also issues rates weekly. So for this week, they will issue a list of the rates and the conversions that you can use to convert your dollar to Kenyan shilling. Okay, yeah. So as long as you make your payments for statutory deductions such as NSSF, NHIF, PAYE, NITA, as long as you make those payments in Kenyan shillings, there's no problem. And the rate, CBK or the KRA website.
Thank you so much, Zedi. I think the last but not least, then we call it a day, from Stephen M. As a consultant, what's my role in the payment of withholding tax? That's the question.
Now, if you're a consultant, okay, and you are doing an advisory business for any company or any business, one, you need to, they'll require you to give them your PIN. If you're making income that is over and above 24,000 in a month, then they need to withhold 5% of it from the payment they make to you. Okay, so let's say Steve is a consultant and is doing business with, say, company A. Okay, company A will withhold 5% of any payment that is over and above 24,000 in that month that is paid to Steve. Okay, now if company A withholds 5%, what will they do? They'll remit this withholding tax to KRA. Now for Steve, this becomes like an advance tax or a final tax. What does that mean? It's a credit that you can use against your future liabilities for that year. So when you're filing your return at the end of the year, you can use that 5%, which already is visible in your KRA portal. You can use that 5% as a relief or as a credit against your taxable liability. Okay. Now, what is your role in the payment? To ensure that your client or the business you're doing with remits that withholding tax. They deduct and then they remit. Okay, so that you can use it as a tax credit. Otherwise, if they don't remit, then you'll be losing it. You'll need to pay again tax on that amount. Yeah, but if you make the payment, if they make the payment, well and good, you can utilize that as a credit against your taxable supplies. Now that means that if they declare, or the moment they have, declared on iTax that so-and-so offered me advisory services and I have withheld 5%, then that makes KRA to be aware that you made 100% somewhere, and therefore this 5% is like an early payment of tax. So you'll be required to pay 30% tax on the remaining 95%. I don't know if that was clear, but yeah, I hope I've answered your question, Steve.
Yeah, thank you. You've answered actually. Thank you so much.
Great. Great. I think our time has really moved. We already passed time, and I think I'd like to give it back to Clinton on this one, so that you can pick it up from there. If there are any other questions or so, I think we can have a chat outside this platform. Okay. Thank you so much, guys, for your time. Thank you also for taking time to listen and for the questions.
Thank you so much, Zedi, for that wonderful presentation over there. I can see the feedback is really good. And Steve is saying good presentation. Robin is also thanking you for the feedback. That's very insightful. And all those positive feedbacks that we've gotten out there. At this juncture, I think it's also good that we call it a moment until such a moment that we'll have a similar or nearly similar presentation webinar in a week or 2 weeks to come. But in the meantime, I want to really thank all of us who created time to attend this webinar, because if it were not, you guys would have not made it this wonderful. And for that reason, tunashukuru sana as capable team. We still have got more to come this year. This is just but the first of it. We really have got good topics that are yet to be covered. And in due time, we'll share our webinar calendar so that you can also help you plan well of your day. And just to appreciate Zedi Martini saying thanks for the presentation and welcome. Hold more sessions for such. Yes, we'll really have such sessions as often as possible. Then Joel Karanja, very informed presentation. Thank you so much. Otieno Moses, thank you. It was informative. Francis Kivuli, kindly send us the notes for details. Okay, fine. We'll share that in due course, and also even the recordings for your own reference. Otherwise, if there's none, then we love to. Dennis B, where is the link for CPD service? Yeah, we'll share it. Our admin is in the call, so I'm watching. We'll really sort you guys with that. You'll have the certificates sent to your emails in due course. Otherwise, thank you so much. We are free to leave at our pleasure.